Within the Sustainable World portfolios in the last quarter, we've maintained our focus on quality, long-term themes, but we've been very valuation aware. Some parts of the market, such as the energy transition, is continuing to struggle, but we're looking for an opportunistic approach to finding parts of the supply chain that we think are going to grow from these valuations and lead within the transition to a sustainable economy. The water and waste theme is something that we maintain high conviction in, the high US exposure within industrials, which have been performing excellently in the last 3 to 6 months. Also, the AI theme through a couple of our US funds has continued to go from strength to strength. And we're looking at this in a measured way, not overly exposing ourselves to the names that have done exceptionally well, but looking down the supply chain, staying disciplined with our valuation approach, and looking to benefit from this long-term structural growth. On the non-equity side, we remain high conviction in global bonds, impact bonds, and the use of proceeds names that have done so well in terms of the impact they've generated, the engagement, and also in recent months' performance. We've also added commodities to the portfolio through gold and silver bullion. Gold as a safe haven asset, which we continue to like even at these valuations and the growth we've seen within the portfolios, and silver with its usage within the energy transition through batteries and the supply chain. Alongside these portfolio changes, we've been working towards increasing our focus on stewardship and being good stewards of our client capital. In April, we became signatories of the UN's Principles of Responsible Investment, the PRI. This is a global collaborative network of investment managers to try and come together to show our work on environmental, social and governance characteristics and how we embed them within our portfolios. It's showing that we believe that these characteristics and these factors are crucial to long-term holding of our clients' assets and the protection of their assets. And it's a network that we believe we can come together and we can drive growth within the industry and share our ideas and try to improve, which we believe is what sustainability is all about. We've also, as a company, become a signatory of the CCLA's Advisor Action Initiative. This is essentially a call to arms for the advisors and the discretionary fund managers in the industry to speak to their clients and understand what their values and preferences of sustainability are, amalgamate them as a group and come together, and then go to the firms, the stocks that are held within our portfolios, and actively try and drive change by engagement. This is a part of the sustainable investing landscape that we think has been underserved by the recent iteration of sustainable investing. We believe engagement with companies can drive real change, and we can be at the forefront of actually deciding what companies' processes and products and purpose look like in the future. Advisor Action is a scheme where advisors and discretionary fund managers speak to their clients and understand what the actual values are, the sustainability preferences are of our clients. We take it to a group setting and we come together and we decide where we believe we can collaborate and speak to companies to actually make a real difference. This is shown by CCLA's mental health benchmark, of which the Advisor Action framework is a signatory of. Last week, they introduced their third iteration of the mental health benchmark, where they showed that the 100 biggest companies in the UK, some don't take mental health as seriously as others, and some have been engaging with the framework, trying to improve and drive better outcomes for their workers, build a better environment for their employees' mental health. Another social issue we've been working hard on is mitigating the obesity epidemic, understanding what the real drivers are. Last August, I went to the asset managers that we held in Sustainable World portfolios and said to them, I've read this book on ultra-processed foods, I've discovered all these new ideas on the way that the obesity epidemic has come about, the growth now of 2 out of 3 Americans overweight and or obese, and the UK not far behind, and I believe these are the factors causing it. How do you embed that within your processes? One particular asset manager went away and they looked at their holdings and they wrote a white paper on why they've changed their thesis on the holdings post our conversation and post their new research. I'm happy to announce post our engagement with the firm that the stock in question, the biggest ultra-processed food provider in the world, is no longer held in their portfolios, and they've written a white paper to discuss why, what the issues were with that company and how we expect that company to play the theme going forward. The reason we're so proud to be part of this initiative is that we believe that financial advisors have been underutilised as a resource in building a sustainable investment landscape. They're the people that talk to their clients, they understand their preferences, and they understand what drives their motivations to invest sustainably. So bringing them to the table, as well as us and asset managers, coming together on the biggest themes affecting our society negatively and our environment, we believe is going to be a really powerful way to drive change. The initiative so far is engaged with Fraser's Group and IBM on their mental health policies in a bid to educate and enhance their processes to drive better outcomes for their workers. Descriptions and analysis of all our stewardship work, as well as our charity work, where in the last quarter we climbed the 3 highest peaks in the UK in aid of Childhood Trust, and we'll be cycling from Brussels to Amsterdam next month in aid of Elizabeth Smile, another childhood charity, can be found on the Sustainability Hub, where I write my blog bi-weekly, and where we have all our latest press articles and all the work that we're doing within the Sustainable World portfolios. Looking forward, we remain incredibly excited about the opportunities investing sustainably. We think as interest rates start to fall, we could start to see these long-term assets really come to the fore again. By long-term assets, I'm talking about the energy transition and these impact names that are real solution providers to some of the environment and our society's biggest challenges.